So joining us now in the After Hours is Chris MacIntosh, the founder and writer at Capitalist Exploits blog. Chris, as I mentioned, you actually live in Singapore. I've never had the pleasure to go, but people tell me that it's a Westerner's best place to go in Asia. I see Jim Rogers is there's a lot of smart, wealthy people that have joined you as kind of moving out there. But one of the things that I would love to pick your brain on is what you see happening in Hong Kong and whether you think that Singapore will be kind of beneficiary of that continued unrest in Hong Kong.
Yeah, look, it's something I've been writing about for some time, actually. I kind of got a heads up earlier on with some private bankers in Singapore who were telling me, look, we're seeing some serious capital coming in from Hong Kong, and this is well before, way before any of the rioting or anything that took place. In fact, it's been going on, Kevin, for about 3 years, but it's sort of that trickle started becoming stronger and stronger. So a lot of the wealthy people saw the writing on the wall well before all of this kicked off into high gear. But yeah, so Singapore's going to continue to be a beneficiary of capital flight from Hong Kong. And I kind of think Hong Kong's finished. I know people don't want it to be that way, and I've got a lot of friends in Hong Kong who certainly don't want it to be that way. And there are those who literally can't really leave. They're either not wealthy enough, or they just don't have, options in terms of, passports, even for example, to get out. And for them, they're deeply concerned. They don't want to be China. So,
So,
but
so tell me why you think Hong Kong's finished. Do you just think that China it will be forced to kind of continue to wrap them in their iron fist, like it's just a matter of time?
I think this kind of comes back to partly to the topic we were talking about before, Kevin, which was all about energy. And one of the other components of that make energy pretty interesting to us is the geopolitical landscape. And what we're seeing there is the US essentially pulling out of the role that it's played for, I guess, since like 41. And actually, that role has very much coincided with globalization. It's been phenomenal,
Right.
and it's brought about relative peace and stability. And what we're seeing now is the US pulling back on this. They're out of the Middle East, or they're increasingly getting out. Now, like I know you could probably got a lot of listeners that are Americans, and there'll be many of them who piss and moan about how the US shouldn't have been there and they shouldn't be intervening and whatever. I don't care. The point is that they have been and now they're not. And then you got to ask yourself, what does that mean? If you look at like previous administrations, they'd always use military enforcement as well as quote unquote diplomacy, which really just when you're the big dog amounts to, hey, folks, this is how it's going to be, play along. That and economic incentives and trade deals and things of that nature, right? To try and get their way essentially. But what it did was it created this massive globalization, on relative stability, which is what empires do. The Brits did it before with the British Empire. Anyway, so what we're looking at now is a very different approach. The military is just getting pulled out. There's now just heavy economic sanctions with literally zero military enforcement, and I don't think it's going to work. It certainly doesn't work. It would work more with a sort of democratic Western type of power, but we're not necessarily dealing with that in many of these instances. And so, if you look at what that means for like Hong Kong, and certainly even for Taiwan, I mean, if I was the Taiwanese government now, I'd be pretty concerned, um, because think about it like this: if we went back to oh, 30 years ago, if we had a similar setup in Hong Kong today, what would the US response have been? I'm pretty confident it would have been a fairly strong military intervention
Right.
to ensure democracy. To because look, I mean, how long? how long did they fight the commies, right? There was what Vietnam was about, and so on and so forth. Anyway, so that's all pulling back, and I can understand it. Um, Part of it is also there's just no appetite for the Americans on the ground for any sort of military intervention. I think to a certain extent Bush cocked that one up with the whole weapons of mass disappearance, and so it's pretty hard to now go out and say,
Yeah.
"Oh, we got to get back into whatever it is." It doesn't really matter. You've shot that bullet. Um, and
So what do you think the investing ramifications are if the U.S. withdrawing from being the global cop that keeps peace? Like
well,
how do you
I think it's a
change the portfolio based on that
totally,
development?
yeah, yeah. Well, look, it comes back to what we're starting to. We began this discussion talking about this narrative around bonds. The only way that bonds continue to outperform is if, and this is, I guess, the bull's argument, deflation, right? It's what's at
Right.
the three Ds, right? Demographics, debt, deflation.
That's
And
right.
so, and so if we look at that, firstly, a country can only raise debt if it's still a functioning country and has relative political stability, right? Countries that
Yeah.
don't have political stability don't raise debt. Syria's not running bond auctions. So when you get this power vacuum, and we're going to see it we're seeing it in the Middle East, um, and I think it can quite easily spread. There's that whole component changes with respect to the bond market, and that whole deflation narrative. The other thing that I think that people miss with the deflation narrative is, again, like kind of like how the generals fight the last war. If you look at the last inflationary experiences that we've had, they were
Yeah.
demand driven, but demand doesn't need to be the only thing that actually drives any particular asset price. It can be supply destruction. And so if you think of a
Right.
political void globally, that increases the costs of insuring your ships that travel. If the navy's not there to protect them, and so on and so forth. Um, it's logistical supply chains. All these things get impacted, and they can ripple through um, those markets to the point where the supply just gets constricted because you and I are running a business, and let's say we're running, I don't know, 20% margins, and now our cost of shipping the goods has gone up by 10-15%, and some other tariff or something has been implemented because we can't trade with this country or in that country because there's a geopolitical element here where basically everybody's sort of going back to tribalism to a certain extent. And we just shut shop. We can't do it. And so then a
Yeah.
supply destruction. So that's where I can see a lot of that potentially taking place. Um,
Well, the other thing is that you talked about the U.S. being the cop of the world, but that's also coincided with globalism, and globalism has been deflationary. Whether it be
Absolutely.
the
Yep.
fall of the Berlin Wall and the amount a huge amount of supply of labor that came on there, or the fact that China entering the WTO was hugely deflationary. And now, if you just think about those deflationary forces caused less inflation and lower interest rates. If you just take a simple approach, you could argue the fact that if we're reversing those trends, we should see higher interest rates and higher inflation.
You absolutely nailed it. That whole It's been one of our core themes, and I've written about it a ton on the blog, and I've pissed off a lot of people, I think. But um, you know, look, it was like when Trump came to power. I remember writing an article that I got a lot of flack for, and it was about Duterte, and basically I said this was in it must have been 2016, I think. And I said the West needs to pay attention to what's happening in the Philippines, and kind of here's why. And I talked about the rise of strongmen. I think that's what the post was called. In any event, what it really comes down to is this fracturing of those allegiances that existed, and a shift towards essentially strong men. I'm not saying they're strong, but perception of strong men. So like Duterte is a strong man, Putin's a strong man, right? She's a
Right.
strong, and that's again, it's like a social thing. When times are bad, we actually, as humans, we look for a savior. We look for someone that's going to do something. And the worse the situation, the more we will accept somebody who seems pretty fucking crazy, right? So like Duterte coming out saying the things that he says, um, that would never fly in Singapore, politically stable. Like people would just go, "What? Are you mad?" But
Right.
in a place where there's a lot of problems, they're like, "Yeah, no, we need a guy like that, right? We need Arnold
Right.
Schwarzenegger. He's going to come in and he's going to just, you know, take it back." So anyway, so all of that is contributing towards destabilization of that whole globalization trend. And the other thing that I think is kind of important, and you touched on this, was the cost of capital. And so when I look at there's a feedback loop here. So if you look at the commodity markets, they're incredibly capital intensive, right? Um, and so if you think about having the supply destruction, let's say you got a project and your baseline assumptions factor a particular interest cost. Now that cost rises, right? As a consequence um, of just interest rates moving just even ever so slightly.
Right.
Um, Now it's not even so much the interest rate. If we move to a point where not just the interest rates are rising, but the future expectations are that they will rise. Think about how your hurdle rates look. If you're a quant, right? You're one of those pointy shoes who sort of sits there with your cardigan and playing Scrabble for fun and your pencils, and you're the guy that has to do all of this quant stuff. You're going to refactor your hurdle rates, and you're going to go back to the board and go, "Sorry guys, this isn't going to fly," because again, you got major projects. These things are 5, 7, 10 years out, right? So it doesn't really matter what you're looking at now in terms of, oh, what's the interest rate tomorrow? What's it in 2 years? It's like you're looking 5, 10 years out, saying, what is it going to be? And what price do we need in order for us to actually commit capital now and risk it
Right.
to, right? So the only way that then starts to work is when you just have a higher price of the actual good. Now, here's the other interesting thing. If you've had all this supply destruction, um, you have so the asset prices start rising. As the asset prices rise, the shift of capital from the bonds, because remember, like anyone who's been investing for the last, um, 10 years at least, in terms of major capital allocations, it's been into the bond market, and then it's been into those risky assets like venture capital, where
Right.
it's all about production growth. That shale actually fits into this. So it was never about economics. It was just about if you could show growth, right? Which was WeWork. It's
Right.
all the shit that SoftBank has now got sitting on their balance sheet.
Because
Um,
there was so little growth throughout the world that people were overpaying for
so you
what actually could grow.
you look. You might, let's say you've got a I don't know, 60-40 portfolio, right? The traditional bonds, equities. Well, your 60 was just so shitty, right? Because it just you were getting no yield. So on the 40, you were like, I have to make up for the fact that I'm not getting much on the 60. So it pushed
Right.
people further down the risk curve. Now you probably don't know this, but way back I started a venture capital company. And part of my whole reasoning for doing that was that I believed that we'd see this shift to the far end of the risk curve. And I was like, shit, how do I participate in that? I'm like, that's
Right.
probably the best way. And I sold and got out of that in 2016, which is in hindsight a little bit early. But I was like, things were seriously loopy then, like seriously loopy. And and I was like, I have to get out. This is nuts. I mean, I can't. This is crazy.
And
And
it's gotten even crazier.
it got crazier. But you can see how quickly that changes, right? So what we're gonna at one point it was 65 billion they were valued at.
85, I think they had it at.
Crikey. And now it's
Yeah.
worth eight, I think was the last thing where
Yeah, I know.
Masayoshi.
Without even a trade, like without a trade, just basically almost overnight, it's gone
Exactly.
down 90%.
Yeah. Yeah.
It's just, and this is people. Listen, you don't have to get me started on this. The private equity side, the bubble is actually more there than any parts of the equity market. Like people are worried about the
100%.
regular stock market. I think that it's nothing compared to what
And guess what? There's
these
no
guys that are
liquidity.
marking to. Sorry, go ahead, Chris.
I said, and guess what? There's no liquidity in that. It's
I
not
know.
like
Well, as they just found out, right?
yeah. I mean, in the equity market, there's you take a hit, and sure, stuff can drop, but like, I mean, this is so. I wrote an article about good old Masayoshi-san um, in I think it was April this year, saying this thing looks like a fucking bug in search of a windshield, and here's why. And so when, but the thing with them is that they're so huge. Like when you look at distribution, so like Google, for example, own 80% of search, and that Pareto distribution exists across pretty much everything. These guys are that Pareto distribution. They're like 80% of that. They literally drove the
Right.
market. And so, I mean, I was in that space, and it was literally like, oh, SoftBank are investing in this deal. You have to get in, right? And to a
Yeah.
certain extent, you were like, okay, well, which round are they in? Like, if it's the first thing, you probably get into it. Why? Because you knew that they'd come back in again with their next
That's right.
fucking massive
That's
tranche.
right.
It didn't matter whether the company was ever going to make money. Like, you know what I mean? You just
Yeah,
knew.
yeah, I hear you. You're
So
just front running SoftBank.
yeah, exactly. And that's so dangerous. So now we're at a situation where it's like, well, SoftBank basically going to need a bailout. And
Well, they're going to need to keep they need to keep bidding for these stocks because they took it up and they're the only bidders.
well,
That's what they realized, right? Like,
not to raise any more capital because the
yeah,
LPs are going to turn around and go, "What the hell?" And so when you think about it like that, right? Let's go back to our discussion about commodities and cost of capital rising. Where do you just average investors start looking at? They'll go, well, hell, um, I'm not going to get into these wannabe unicorns backed by Masayoshi-san because that dog no longer hunts. No, now you're going to start looking what has performed well, and you're going to start looking at these weird as fuck things called commodities, right? Why? Because they were the only thing that started to go up, and so I actually think all of this points to just again, people were looking for inflation, thinking that it was going to be demand led, and it's not. And inflation is going to be supply destruction, which, if you think about it, is actually just it's stagflation, and that really is the worst of all worlds.
right.
It's like contracting
Yeah.
horrible STD without even enjoying the act that gave it to you.
Oh man, Chris, you were made for the huddle, bud. So how did you end up? I'm going to embarrass myself. I want to know how you ended up in Singapore, but I'm going to guess that your accent. You're South African.
I'm a thoroughbred mongrel. Yeah, born
Uh,
and bred in South Africa. Spent some time in Zimbabwe and Wales.
Okay, so I did not embarrass myself. I guessed right. Okay, so why don't you tell us how you ended up in Singapore? I see that you were at Lehman Brothers. Were you there during during the end of Lehman Brothers? And just why don't you walk us through? Because it's not
Yeah,
often we get somebody with such a varied past.
that was early days, well before they completely um, cocked things up. So I started off trying to. I thought I wanted to be a lawyer. Actually, it was weird. I was like 16. I started reading bloody John Grisham books, and I was like, "Yeah, fuck it, that's it. I'm going to be a lawyer. He's cool. All those guys are so cool." And so, um, So I started studying that, and I was doing it all. I was lucky to be the son of completely broke parents, and so I left Africa to go and live my own life 2 weeks after I finished high school, and I worked
Okay.
full time and studied nights basically. Anyway, so that's where I then second year, um, and everything was correspondence. I was studying full time, doing managing to do full time studies while still full time working, which actually just
So where did you go? Like you said, you left Africa, but did you go to London?
to London. Yep, yep,
Okay, yeah,
yeah.
yeah,
So um, anyway, I found economics, and I was like, "Oh, this is kind of cool. This is even cooler than Grisham." And so
right.
I basically switched pretty much, and yes, I spent some time there. Worked for a bunch of um, the behemoths, and I was fortunate enough to have a really awesome boss who one day sat me down and he said, "Chris, you shouldn't be here." And I was like, "What do you mean?" I was like, "I enjoy this. This is cool stuff." And he said, "No, you don't have you, the right temperament." And that was basically, I would tell him, what's the word? Not outspoken,
What you
but
what you thought, and you didn't
yeah,
have the
to
right
say what I
temperament because
think.
you told them what you thought, right?
Yeah, and I mentioned something in a meeting before, and that's when he pulled me aside, and he's like, he said that was fine. He said, nothing wrong, because I was just bringing up something which needed doing, and it was, I'm not stupid to go and say things that you can't really be saying. But he said, look, if you want to get far in this here, you basically need to do some brown nosing to a certain extent. And he's like, and you're just not that guy. So like you need to do something else. Um, and yeah, super good guy. Really, really cool. And then actually, I got inspired I was working at JPM, and there's this Aussie dude who sold a FX trading firm to JPM, and part of the deal was that he had to work for them for 2 years, right?
Okay.
Um, and help transition the business and blah 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 blah. Anyway, and this was back when we still wore suits. It was like you had a Friday dress down, but everything was like
Oh, I remember those days. I
London.
remember those. My bank was the last bank to do that. We held tough. We were the last ones when finally everyone decided that Friday casual
You
day
were the
was
most well done.
something. They finally let us do it. Yeah, like that's how uptight we were about it. But anyways, go on. Sorry.
Yeah, so this guy, I remember he bloody wandered into the London office in we call them jandals here, or sandals, like flip flops,
Yeah.
pair of board shorts and a t-shirt, and that's how he came to work. And he was classic, super smart guy, really, really, which is how I built a really successful company. And he was like, "Fuck it, didn't put that in my contract and tell me what I could wear." So,
So you realized you wanted to be more like the Jandal guy.
well, I hit off well with him, and we started talking a lot about sort of entrepreneurship and and then I started getting into leasing properties in London, arbitraging. So like I was living like a bloody squatter, big house, one bedroom. We rent the bedroom out, and there's tons of other people, and there's like one bathroom. And I think there was like 15 people in the house. Um,
Right.
and they're all Aussies and Kiwis and South Africans that have come out for, a year's work on a visa, and then they're going to travel around Europe and see how many girls they can nab, drink too much, and all that kind of fun stuff. And the point is that none of them want to have any long-term lease. They don't want any obligations. Like they're there to have fun. And
Right.
so I quickly saw that there was this massive difference between the long-term leases and short-term leases. So I
Oh,
went
that is
started
awesome.
leasing houses, and then I basically became a slumlord.
You're like the original WeWork, because that's what WeWork does, right? Like they arbitrage between long-term leases and short-term leases.
Exactly.
You were just doing it for
Yeah.
fellow realm members of the United Kingdom, and that they wanted to come to London. You did it. You were the original WeWork.
I yeah. I should have fucking patented the word "we." Damn it! I could have nailed that for 6 million.
Oh, that's a great story. And so, how did you end up in Singapore? Did you
Um,
choose that? Like, was that something like you went around and said, "I want to live here," or did you end up there for a job?
no, no. So I quit work there. I found a girl who was drunk in a pub, and she thought I looked good because she was drunk. And then I never let go of her because she's quite good, and so she's been my wife now for maybe 17 odd years, I guess, something like
Okay.
that.
And is she from Singapore?
No, she's a Kiwi, which is
Okay.
where I actually spend a lot of time. And the business is based in Singapore. Um,
Oh, okay.
but we've lived all over. We actually spent some time living in Thailand, and um, yeah, so the business is based there. And then I spent a bunch of time there, and I'm actually um, right now I'm in New Zealand. Um,
Oh, okay.
yeah,
So, what's your favorite place to live? Like, where do you hope to spend more time going forward?
um, you know, there's something to be said for Mordor.
Mordor? Oh, I see. New Zealand. Okay,
Yeah,
fair enough. I get it. I was a little slow on the joke, but yeah. So I've never been. Is it just
it's
the
like
kind of
so
a friendlier, nicer Australia?
you've been to British Columbia, right?
Yeah, of course. Yeah,
Yeah, because you're a Canadian. So
yeah.
it's quite similar to British Columbia, except better weather. And
Oh, okay.
if you've been to Switzerland or Austria,
Yeah, I've been there.
it's kind
Yeah,
of it's got elements of that. And then the
but
beach,
with no Swiss, so it's okay.
yeah, without the Swiss. And then the beaches are like Fiji or Hawaii and beautiful white beach. It is quite honestly the most beautiful place I ever been to. And like my wife and I, we traveled for like 4 years. We hammered and we hit like about 60 different countries, and we traveled a lot all over the place. And I'd never actually been here. And I came here and I was like, bloody hell, this place is just phenomenally cool. Um,
Oh, well,
yeah,
that's
so
great. Okay, well, I got to go. It's on my list. And
well,
maybe I'll go and I'll never come back. Anyways, Chris, it's been a pleasure chatting with you. It's been lots of fun. You are truly a perfect market huddle guest in terms of the stories and I especially liked all your kind of stagflation arguments and the fact that you weren't telling me that bonds were going to go to -4%. So thank you so much for being on. Why don't you tell people again where they can find you? And I highly recommend that everyone go and sign up. I see that you have a free newsletter that you can kind of get some updates from there. And why don't you tell people where they can find you?
yeah, sure. So website's capitalistexploits.at, although if you put .com, it'll take you there anyways. And then Twitter handle is at capitalistexp. So that's it.
Great. Well, thanks again.
Thank you, Kevin. It's really, really appreciate talking to you. I've been reading your stuff for Brent Johnston put me onto you. So,
Oh, okay.
yeah,
Even though I'm often on the other side of Brent's thing, he still seems to be kind enough to tell people that they should read me.
and so they should, and so they should.
Okay.
Yeah,
Well, thanks again. Take care. Have a great weekend.
awesome. You take care.